In today's market update, we're going to be taking a look at a few markets, and in particular, we are going to be focusing on the targets generated by price interacting with Hurst's FLD, the future line of demarcation. And I am going to be giving you a sneak preview of a new indicator that we have been working on for a long time and will be releasing shortly. So let's start off by taking a look at the S&P 500. This is SPX data, and this is the analysis that we've been looking at for a long time in these market updates. In particular, you will see, of course, the important trough that formed in October of this year. And I'm not presenting the bigger view, but if you go and take a look at recent market updates, you can very quickly gain an idea of what the bigger picture is. And so instead of repeating myself in each one of these videos, I would prefer to get straight to the point. This is the trough that we've been looking at recently. You can see that according to this analysis, it has been phased as a trough of 20-week magnitude. That is a very likely magnitude for this trough. It is also possible that it could be a 40-week cycle trough, and the minimum possible trough that it could be is an 80-day cycle trough. I discussed this in last week's market update, so I would encourage you to take a look at that. It is, in my opinion, of at least 40-week magnitude, but in terms of tracking the finer detail, the movement of the shorter cycles, and here we are looking at only the past 6 weeks or so, we can put aside the discussion of the exact magnitude of that trough for now and consider what is happening with the shorter cycles. You will know that we have been expecting the 40-day cycle trough to form in this market. You can see that according to this analysis, it has been positioned over here, which was on Thursday of 2 weeks ago. And I mentioned in last week's market update video that that was a potential position for the 40-day cycle trough. Now, you will also know that following a trough of at least 20-week magnitude, we would expect price to find support at the level of the FLD. So the FLD is, of course, the future line of demarcation. It is a tool that was defined by Hurst 50 years ago, and you probably know by now, if you've watched any of these market update videos, that it is my favorite cycle tool, and I trade a particular strategy that has to do with the way in which price interacts with this line. It follows a very reliable sequence of interactions in terms of, first of all, crossing above the FLD and generating a target to the upside, and then following a trough of 20-week magnitude, it is expected to find support at the level of the 40-day cycle FLD at the time that the 40-day cycle trough is forming. So you will notice that last week on Thursday, in fact, price came down to almost touch that 40-day cycle trough, and so that is also a possible position for the 40-day cycle. The analysis that has been performed by Sentient Trader, and I haven't influenced this analysis, has positioned the 40-day cycle trough over here at 34 days since the trough in October. That 34 days is exactly the average length of the 40-day cycle that was discovered by Hurst 50 years ago, and so it is a very likely position for that 40-day cycle. It is also possible that because of the principle of variation, the cycle wavelengths are, of course, constantly varying. These are dynamic cycles that are influencing the financial markets, and it is possible that that 40-day cycle trough only formed over here last week at 41 days since the trough at the end of October. Nevertheless, it seems very likely that the 40-day cycle trough has indeed formed, and so what are we expecting next? Well, of course, the next major trough that we are expecting to form in the markets is this 80-day cycle trough. You can see we have a very neat nest of lows going all the way up to the 40-day cycle, and then we have a slightly displaced 80-day cycle, circle and whiskers, displaced to the left. That displacement occurs because of the fact that these circles and whiskers are calculated by measuring the recent average wavelength of each one of these cycles and then projecting forward to anticipate the position of the next trough. And so in measuring the recent wavelength of the 80-day cycle, it has been found to be running fairly short, which is what we would expect if the trough in October of last year was a trough of a fairly big cycle, because in that that case, the underlying trend would definitely be bullish, and cycles shorter than the cycle that formed the trough in October of last year would be expected to form troughs early. As a result of those early troughs, of course, we are calculating a recent wavelength that is shorter than the long-term average of that cycle, and that is why that circle is displaced to the left. The fact that the shorter cycles from 40 days and shorter are so accurately lined up gives us some confidence in terms of the position of the shorter cycles, and I would be inclined to expect the 80-day cycle trough to form closer to what I call the center of gravity of this nest of lows, which is basically where I've drawn this arrow, as opposed to where the circle is for the 80-day cycle. And so what is the situation? We have, of course, seen a very bullish 40-day cycle that formed a trough either here or here, and so the markets are clearly bullish, which increases the chances that this trough that formed at the end of October is of high magnitude, possibly higher than 20 weeks, maybe 40 weeks. I even suggested in last week's market update that it could possibly be an unusually early 18-month cycle trough. Nevertheless, it is clearly an important cycle trough that formed in October, which is why we have seen such a bullish market. What are we expecting to happen next? Well, of course, price is going to bounce out of the 40-day cycle trough. So far, it has been a little sluggish in terms of bouncing up out of that trough. It is then going to form a second peak, in other words, another 40-day cycle peak before turning down and coming down into the 80-day cycle trough, which is expected at the end of this year or perhaps in the first few days of next year. It is worth pointing out that because we are clearly still in a bullish market, our focus should not necessarily be on this move down. One of the dangers of being a cycle analyst is you're looking for the next move, and the fact that we're anticipating a peak does not mean that we are focusing on price moving down. This market has been bullish, and as long as it remains bullish, we are happy to take advantage of that. As price does turn down and start moving into the 80-day cycle trough, we will of course be able to generate targets to the downside. If looking at diamonds at the foot of your chart is still a bit of a mystery to you, a useful tool in Sentient Trader software is the composite model line. The composite model line takes all of the information contained in the analysis and it projects the results of that information onto the chart and into the future. Here you can see, let me just hide those FLDs for the moment. Here you can see the composite model line tracks price movement recently fairly accurately. In other words, the cycle wavelengths and amplitudes that it has measured as a result of the analysis at the foot of the chart provides us with a fairly accurate idea of what that price action actually was. We can see from the composite model line that we are expecting price to turn down and move down into this 80-day cycle trough expected towards the end of the year. There is an interesting comparison to be made with the Nasdaq. This is NDX, and you can see that the Nasdaq has the same trough at the end of October, but according to this analysis, that trough was of only 80-day magnitude. I'm not going to be debating the magnitude of that trough. It has been the subject of recent market update videos, and so we know that it is at least an 80-day cycle trough. It could be a 20-week cycle trough, and it could also be a 40-week cycle trough that formed at the end of October. That does not change our analysis in terms of what has been happening recently to the shorter cycles that we are focusing on here. You will notice that in the Nasdaq we have a nest of lows for the 40-day cycle trough. Sentient Trader has not yet positioned the diamonds or has not yet positioned the 40-day cycle trough in the analysis, and that is because it doesn't actually have enough information to confirm that that trough has formed. It's a very important thing when you are working with Hurst cycles analysis, and particularly with Hurst's notation, which are these diamonds and the circles and whiskers and nests of lows at the foot of the chart. It's very important that you don't focus only on the diamonds. The circles and whiskers and the nests of lows are just as important, if not more important. If you wait until those diamonds are positioned on the chart by the software or by yourself as an analyst, you have possibly missed your trading opportunity. The important thing is to focus on these nests of lows, the circles and whiskers, showing us when we are expecting the next trough of a particular magnitude to form in the market. Here you can see we also have the next big trough forming towards the beginning of next year. This is potentially a 20-week cycle trough, but of course the magnitude of that trough will depend upon the magnitude of this trough at the end of October. It is certainly the next 80-day cycle trough, so that is how we will refer to it as we discuss the possibilities of what is happening here. The interesting thing is that the 40-day cycle trough probably formed in the Nasdaq just a few days after the 40-day cycle trough formed in the S&P 500. Now, different markets have a great deal in common. That is another one of Hurst's fundamental principles, the principle of commonality, which tells us that markets tend to have a great deal in common in terms of the way in which they move, and in particular in terms of the cycles that are influencing them. What we usually find is that when a 40-day cycle trough or an 18-month cycle trough forms in one market, then that same magnitude cycle trough is forming in another market. When it comes to the shorter cycles, and I'm considering the 40-day cycle here as a shorter cycle, those cycle troughs might not form exactly on the same day, which is interesting, but they will often form within a few days of each other. And so it is likely that the 40-day cycle trough formed in the Nasdaq last Monday. And notice that in the Nasdaq, price much more obviously found support at the level of the 40-day cycle FLD at the time that the 40-day cycle trough was forming, which, as I've already mentioned, is exactly what we expect following a trough of at least 20-week magnitude. What is our expectation for the Nasdaq? It is very similar to our expectation for the S&P 500, which is that price is, of course, bouncing out of a 40-day cycle trough. It is going to reach up and form a second peak in the M shape that cycles form in markets, and then of course it will turn down and come down into this 20-week or at least 80-day cycle trough that is expected early next year. Again, the composite model line provides us with an easy way of visualizing the implications of this analysis. You will notice that the shape of the M that is formed by the composite model line is a little less bullish, a little more bearish than it was in the S&P 500, but I wouldn't take that too seriously. That is because of the lower magnitude of this trough in this analysis, which is not necessarily the correct magnitude, and so the general shape is, as you can see on the chart, but price might not come down quite so far as is indicated by the composite model line in the Nasdaq. Now let's take a quick look at gold. This is what has happened in gold. We have, of course, an important trough that formed here at the beginning of October. I discussed that trough in a recent market update about gold. You can see it has been phased here as a trough of 20-week magnitude. There's an interesting discussion to be had about the magnitude of that trough. A similar thing is happening in gold as has happened in the stock markets that we looked at a moment ago, and that is that magnitude is possibly of a cycle much greater than has been shown on this chart. In fact, it is certainly possible that this is a 40-week cycle trough, and dare I suggest, it might even be a trough of the 18-month cycle. Despite the uncertainty of the magnitude of that trough, however, we can see a very clear cycle shape that has played out in gold, and you can see the obvious M shape that is shown there. The 40-day cycle trough occurred over here in about the middle of November. Price reached up and formed a peak last week on Monday with this very dramatic day, as you can see over here. Look at the nest of highs that is sitting right above that price peak. We were expecting a peak of 20-week magnitude. There is a discussion to be had, and we're not going to do it in today's video, but we might take a look at gold in a future video and discuss the longer-term picture in more detail. There is a discussion to be had about the magnitude of that peak. Notice this whisker for the 18-month cycle. That's because the 18-month cycle peak is either lying some distance behind us, or it is very much stretched out, and that 18-month cycle peak should be positioned over here. We're not going to debate that now because I want to take a look at some FLD targets, which I think you will find interesting. The important thing about gold is that, of course, there is an 80-day cycle trough that is expected. Again, we have a very neat nest of lows all the way up to the 40-day cycle level, and then a displaced 80-day cycle circle to the left, just as we saw in the S&P 500. And so the 80-day cycle trough is expected shortly in gold. Price crossed down below the 20-day cycle FLD, generating a target of about 1925. Price might not get down there, of course, because as you can see, we have had a bullish 80-day cycle so far. Finally, a very quick look at Bitcoin. We have had a wonderful bullish move in Bitcoin that actually generated in a fairly parabolic fashion. As you can see, these upward moves have been accelerating upwards, which is something that Bitcoin does tend to do, making the position of the troughs fairly tricky. However, we do have a clear trough analysis, as you can see, very similar to the analysis in gold, interestingly, with a 20-week cycle trough over here in early October, and we are looking at an 80-day cycle trough looming ahead of us. Price has not yet crossed down below the 20-day FLD, but when it does, it will of course generate a target to the downside. It is fairly obvious from this analysis that the peak that has just formed in Bitcoin is a peak of 20-week magnitude. There is the nest of highs for that 20-week cycle peak. So in each one of these analyses, we've been taking a look at targets that are generated as a result of price crossing the FLDs. In particular, you can see a target here in gold that has been generated by price crossing down below the 20-day FLD. This is the power of these FLDs. They sometimes provide support and resistance, and when they do not provide support and resistance but are instead crossed by price, they generate targets. And whether the FLD is going to provide support or resistance or will lead to price crossing the FLD is not an arbitrary thing. There tends to be a regular sequence of interactions between price and that FLD. And in the last few minutes of this video, I would like to give you a sneak peek of a new indicator that we have and will be releasing upon an unsuspecting public soon, which does exactly what I have just mentioned. It not only calculates targets on the basis of the FLD, it also predicts where the FLD is going to provide support, resistance, or provide a crossing point. Here is that indicator on the MT4 trading platform. We are going to be releasing the indicator on MT4 and also TradingView and NinjaTrader, and we have a few other trading platforms lined up. In this sneak preview, I'm just going to demonstrate what the indicator does in terms of generating these targets. The FLD targets are extraordinarily accurate. This is, again, the price of gold that we've just been looking at in Sentient Trader. Notice these targets. Can you see here the arrow pointing to the 40-week target there? Here is the 20-week target, and here is the 80-day target. On each time frame for this indicator, there are 3 FLDs that are worked with. Targets are generated for each one of those FLDs, and so we have 3 FLDs, a pink FLD, an orange FLD, and a green FLD. You will notice a key up at the top of the chart that tells us what each one of those colors represents. In this case, on a weekly chart of gold, the pink FLD is for the 80-day cycle. The orange FLD is for the 20-week cycle, and the green FLD is for the 40-week cycle. Previous targets are also very interesting because when a target is fulfilled, it tells us something. When a target is not quite reached, it tells us something else. Those previous targets are presented over here with brackets to each side of the cycle name. So here is the previous 80-day cycle target on the weekly chart of gold. Notice this 20-week cycle target, which was just below price at the beginning of October. In other words, that target was not quite reached. There is another target that was also not quite reached, which is this 40-week cycle target. When a target to the downside is not quite reached, it indicates that, of course, there is bullishness in the market. Notice that the indicator is also plotting diamonds at the foot of the chart because it is performing a form of cycle analysis. The interesting thing about this indicator is that it observes or tracks the interaction between price and each one of these FLDs, and it uses that information to feed back to the analysis. That's an extremely powerful combination. The final thing I would like to point out in this very quick sneak preview are the FLD lines that you can see forecast into the future. Here is the pink 80-day FLD, here is the orange FLD, the 20-week FLD, and here, of course, is the 40-week FLD. Now notice these arrows. You will notice that the pink FLD, the 80-day cycle FLD, has upward pointing arrows. And there are some letters here that you might not be able to make out. They are presenting B-C. And that indicates that the 80-day cycle FLD here is expected to provide support. Perhaps the most powerful way of interpreting price interacting with the FLD is being able to see dynamic levels of support and resistance that are provided by these FLDs. Notice here the B and C category interaction that is expected when price next interacts with this orange FLD, the 20-week FLD. Notice too the upward pointing arrows. Those upward pointing arrows are a visual representation of the fact that that FLD is expected to provide support. Notice the downward pointing arrows on the green FLD. And the letter that represents the next interaction between price and that FLD is actually hidden here. I've managed to draw over it. It is the letter F. And so we have a very dynamic set of support and resistance levels provided by each one of these FLDs. Let's switch back to the daily chart of gold and let's take a look at that target to the downside. On the daily chart, the pink cycle FLD, take a look at the key up at the top left here, you can see is for the 20-day cycle. I pointed out that the 20-day cycle FLD has been crossed to the downside in Sentient Trader. Here you can see as well price has crossed down below the 20-day cycle FLD. Here is the target that has been generated as a result of price crossing down below that FLD. Notice the previous targets for the 80-day and 40-day cycles, which were met over here, and this price burst upwards was, as we could see on the weekly chart, price moving up and fulfilling the 40-week cycle target. We also now have a 40-day cycle target right down at this level over here. Notice here the nest of lows for the next 80-day cycle trough. The thing that I enjoy about this particular indicator is it really simplifies the whole process. I can spend a long time speaking in detail about the analysis on a chart, but at the end of the day, most of us are really just interested in these targets. This is the NASDAQ, the same FLD indicator, and here you can see the 40-week cycle trough has been positioned by the indicator at the end of October. Notice this 80-day cycle target to the downside that was reached on the day, this is a daily chart, on the day that that 40-week cycle trough formed. You can see that at the moment the targets for the 20-day and the 40-day are all clustered up here. We have an outstanding target for the 80-day cycle target to the upside. That is just a little bit above price over there. And here you can see a clue as to the bullishness of this market with a 40-day cycle target that was not reached. Price didn't quite drop down into that 40-day cycle target. Here is the nest of lows, a much simpler nest of lows than you see in Sentient Trader, which provides a much more detailed analysis, of course, but that is the nest of lows for the 40-day cycle. I've been talking about FLDs providing support and resistance and generating targets for years now, and it is extraordinary to see how often these targets are achieved. They are almost magical at times. Notice this is the 4-hour chart of the Nasdaq. Notice the 10-day and 20-day targets to the downside over here just before the 40-day cycle trough formed. Notice that, of course, the 4-hour chart for the Nasdaq has in fact positioned the 40-day cycle trough. That is what tends to happen as you step into shorter and shorter time frames. With the greater amount of data available, we are able to confidently position cycle troughs by positioning those diamonds there, whereas they might only be circles and whiskers or nests of lows on the longer time frames. But you will notice that these downside targets, the 10-day cycle target was very accurately reached by price reaching down just before the 40-day cycle trough actually formed. And the 20-day cycle target to the downside was not reached, and it was expected to be reached a little bit earlier than the 40-day cycle trough actually did form. Now notice these targets to the upside. You can see that we have a 10-day cycle target to the upside. Looks as if the price might reach up to that target fairly soon. What about support and resistance? Here we have downward pointing arrows with the letter D. In other words, indicating that when price next encounters this pink line, the 5-day cycle FLD, take a look at the key at the top left of the chart, the 5-day cycle FLD, price is expected to cross down below it. In other words, that FLD is going to provide an acceleration point for a downwards move. That is expected to be a D category interaction. Look at the orange cycle FLD. You will notice upwards pointing arrows and the BC category identification. And so price is expected to cross down below the 5-day cycle FLD, the pink FLD, and then find support at the level of the orange FLD. Here is the nest of lows for that next 10-day cycle trough. Where is that 10-day cycle peak expected to form? Well, there is the target for the 10-day cycle peak. We can step down to shorter and shorter cycles. This is the 1-hour time frame, and here you can see the 1-day cycle FLD target has just been achieved. Here was the 2-day cycle target that was achieved over there. Notice the accuracy with which these targets are often achieved, and then price literally reverses at the time that it reaches the target. Here is a 30-minute chart of the Nasdaq. Again, we have targets for our various cycles. A 15-minute chart. Look at the accuracy with which the previous 1-day cycle target to the downside was achieved. Here, the 1-day cycle target to the upside has just been achieved. Here is a 5-minute chart. You can see we're looking at cycles as short as 100 minutes. And here is the 3-hour cycle. And here is a 1-minute chart. Look at this 50-minute cycle target, which was actually not quite achieved. You can see the arrow is just below price there. And so that target wasn't quite achieved. But of course, having that target on the chart would have been of great help to you as price came down and formed this 3-hour cycle trough over here a little earlier this afternoon. What about shorter time frames? Indeed, you can work with this FLD indicator all the way down to very short time frames of only a few seconds per bar. We have beta testers currently testing that at the moment. We are going to be launching these indicators soon, so if they are of interest to you, then make sure that you are on our mailing list or subscribe to our YouTube channel so that you are notified when the indicators are available. I do hope you found the market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.